The Union Plus Rate Advantage card issued by Capital One functions as a specialized financial tool designed specifically for union members who prioritize saving money on interest over earning flashy rewards. While most credit cards on the market today are constantly shouting about cashback percentages and travel miles, this card takes a much more practical and grounded approach. It acts as a safety net for people who might need to carry a balance from time to time, or those who are currently feeling the weight of high-interest debt and need a way to breathe again. When looking at the facts, the standout feature is clearly the introductory offer. New cardholders get a 0% introductory annual percentage rate for 15 months on both new purchases and balance transfers. This is a significant window of time that allows someone to make a large, necessary purchase or move over debt from a high-interest card and pay it down without a single penny of interest stacking up for over a year. After that initial 15-month period ends, the ongoing variable annual percentage rate will settle at 14.99%, 18.99%, or 23.99%, depending on an individual's credit worthiness. It is worth noting that in a financial climate where many credit cards have top-end rates soaring well above 29%, having a cap at 23.99% makes this a relatively modest and more affordable option for the average worker. Beyond the interest rates, the card is very lean when it comes to extra costs. There is a $0 annual fee, which is always a win, and there is also a $0 foreign transaction fee. This second part is a nice perk for union members who might be traveling abroad, as those 3% fees on other cards can really add up during a vacation. The most unique aspect of this card, and honestly the part that feels the most supportive of the audience it serves, is the access to Union Plus hardship grants. These aren't just standard credit card perks, they are actual financial lifelines for people facing real-world struggles like disability, strikes, or involuntary unemployment. It shows an understanding of the specific pain points that union members face, providing a layer of protection that a typical big bank credit card simply does not offer. For someone working in an industry where job stability can be affected by labor disputes or health issues, this feature alone adds a level of value that is hard to quantify in dollars and cents. On top of that, cardholders get access to Capital One's CreditWise app, which is a solid tool for monitoring credit scores and managing overall financial health. However, no tool is perfect, and there are some clear trade-offs to consider here. The biggest drawback is the total lack of a rewards program. If someone is the type of person who pays off their credit card in full every single month and never carries a balance, this card might actually be a bit of a letdown. By using this card for every purchase, that person is essentially leaving money on the table because they aren't earning the 1.5% or 2% cashback that other cards offer. It is a tool for debt management, not for wealth accumulation through spending. There is also a 3% balance transfer fee to keep in mind. Even though the interest rate is 0% for those first 15 months, moving $5,000 of debt onto this card will still cost $150 upfront. It is still usually much cheaper than paying high interest, but it is a cost that needs to be factored into the math. Additionally, the eligibility is very specific. This isn't a card for the general public, it is strictly for current or retired members of participating AFL-CIO unions. This exclusivity is what allows for the specialized grants, but it obviously limits who can apply. There is also the risk of the high late payment annual percentage rate. If a member misses payments, they could lose that great introductory rate or find themselves facing a penalty rate that makes the card much more expensive very quickly. It requires a disciplined approach to reap the full benefits of the low rate structure. In summary, the Union Plus Rate Advantage card is a strong, no-nonsense choice for union members who are planning a major purchase or trying to consolidate debt. The combination of a 15-month 0% introductory window and the unique hardship grants makes it a very supportive tool for the working class. It solves the pain point of high interest costs and provides a safety net for job instability. However, the risks are primarily centered on the lack of rewards and the potential for high costs if payments are missed. If a user does not carry a balance, they won't see much benefit here. It is a specialized tool that works best when used for its specific purpose of interest reduction and financial protection during hard times.